And we're live this week in Coverager for the week of August 6th. I'm getting better at this, August 7th, because this is a special edition of This Week in Coverager. Instead of our typical early Friday morning, this is a late Thursday evening recording and then broadcast on Friday. And as usual, I have my two co-hosts, Shefi and Avi. Hello.
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 Hi. And we have a special guest. So this is going to be a first for This Week in Coverager. Assaf Wand, CEO of Hippo. Welcome.
Thanks for having me.
And you're coming from Tahoe.
I am coming from Tahoe, so if you're going to find random people coming in or the connection is going to be a bit shoddy, then I apologize up front.
That's okay. We were hoping for a background of like a vista with the lake
I,
and the mountains, but next time.
I'll give you a sniff kind of later when we finish.
Okay.
Closest
This
I
is
got was going to Coney Islands last week, so I'm super jealous under the COVID circumstances and being in New York City. So
What did
jealous.
you do at Coney Island? Why did you go there?
I first time trying the beach. I don't think I'm going
Oh,
back. Yeah.
last time, let me tell you, when I walked to the beach in Coney Island, I almost passed out. The distance from where the sand starts to the beach, I saw someone like faint. There was like an ambulance. It is so far and it's so hot. I don't know why they did it like that.
because
Back to telematics.
they need a
You
big
guys are New Yorkers. You should rough it up. What are you talking
yeah.
about? This is not for wusses. This is Coney Island. This is
It's
if you make it to the beach, you earned it.
It's a short walk from the subway to the beach, so no
Yeah.
problem. No problem. This is the podcast where we look back at the week's events. We pick a couple of the bigger topics that have gotten hits on the Coverager page. So I'll kick it over to Shefi to talk. We're going to actually group two topics into one and get everyone's opinion on them. So, Chef?
Yeah, so I guess by luck or by circumstances, we started the week covering the news, the partnership between ADT and Google. Basically, Google purchased a 6.6% stake at ADT for $450 million. And basically, they want the rights to distribute their Nest or smart home product to ADT 6.5 million policyholders. So a lot of millions right here. And this isn't the first kind of it's the first kind of partnerships at this scale, but ADT has partnered in the past with Ring and everybody can understand why they're eyeing the smart home space.
Yep.
On a different topic, on auto telematics, we picked up the news this week that Progressive is basically getting closer to Root's model, in which they're saying that with their snapshot deal, they're going to first collect data upfront from customers in order to show them a premium. So there's a test before you buy, very similar to what we're seeing with Root. And obviously, if the price is right and if the driver is a good driver, then there's going to be a marriage of some sort. As you know, if you read the earnings call of Progressive, you've seen that they talk a lot about increase in shopping, and that's just a testament to how the space is competitive and getting even more competitive. And it's not new, because if you think of the new entrants that are entering the space, a lot of them center around making it really easy and convenient for people to shop. So Progressive is talking about experiencing this basically on their end, because quoting is up, buying less so. And so they're basically anticipating a lot more competition. And we always talk about moves and counter moves. Root does one thing, Progressive does another thing. Similar probably with Hippos and home insurance space. You've got one big player versus the other, and that's what makes the space so interesting. So telematics, my personal opinion is that with home telematics is a long tail, so it's really hard to measure or play around with that data in terms of mitigation. Auto telematics, you know what? Also, kind of there's a black box. It's called a black box for a reason. Even Progressive, when asked, what is the factor of that usage-based insurance data when pricing their auto premium? That was a simple question. Rank it to me from 1 to 10. They're going to say, well, it's based on a lot of factors, and it's based on the demographics, and it's based on income, and it's based on education, and it is also based on how somebody drives. From a marketing angle, and I'm a big component of marketing, and this is my my comment to Hippo, which we'll get to in a bit, smart home insurance sounds great. So from a marketing messaging standpoint, you're getting the customers that you want to get. On the back end, how much of that is, how much does it cost versus the revenue that you're getting? That's still a question mark. So let you guys chime in.
Assaf, and this is something that you said, I think when you announced the recent funding, I think the timing of Google and ADT is interesting because Nest has been out for a while, and Google has been in the space for a while. But I just saw a tweet from the CEO of Zillow. The real value of home has never been clearer. We're grateful to post record Q2 results today. So you said people are buying homes like crazy, and I wonder if Google is seeing all the tech people and kind of like their audience moving to homes, and they're saying this is the time that we need to kind of follow them into their next phase of their lives. So I wonder if it has any relation to that.
I'll give you my view. I don't think it's tactical. I think it's strategic. Nest, been acquired several years ago, hasn't been doing too well. Too expensive of a product. Some products are really, really nice, but hasn't really moved the needle for them. Amazon is doing aggressive moves, acquired Ring, trying to get into the home, trying to add all kind of other components which are monthly, basically monitoring. And I think this is the platform for Google to do that. Google would not compete with Amazon on something that requires a lot of headcount. And they need to offer it via someone else. And I think this is ADT is the largest player on that space. And I think this is it's a logical move. It's a platform for Nest, is a subscription-based monitoring, and it's probably the best alignment they could have found. It's just expensive, but it is what it is, and it makes sense to me.
So two follow-up questions on that, because I'd love to get your perspective really on smart home telematics in terms of consumers, right? It's really hard to get data on the subject. One, my understanding that in terms of priority, the policyholder first values the safety of its home. So video, what do you think about that?
Okay, wow. It's so let's be very specific. What customers want, what end customer wants, and what insurance companies want are two very different things. The things that we care about has to do with water leaks, smoke, fire, and only very, very low on this list is breaking and entry and burglary and stuff of that sort. Customers care about that component, which is usually burglaries and breaking and entry. Anything that has to do with breaking and entry has a very, very low frequency and a very low severity. Hence why insurance companies don't really care about it. We can have a side discussion. By the way, burglary is almost gone from the world. In a world where nobody keeps money, everything is credit card, and you have cameras everywhere, there's very, very few burglary kind of thing. Commercial burglary is a different thing, which is on the rise. So it's not it's not something that happens too often. You're trying to align what customer want and what you want as an insurance company, and make sure that you get the real benefit of reduction in losses, as well as all kind of other benefits, the marketing, the perception, the safety, and these kind of things. So there's a very fine line. We realized that we can give a very broad offering. So what we did is we're trying to find the best of breed to give simple offering to the customers. We have two offerings in Hippo. We have the basic home, basically the basic home protection, and the advanced one. The basic one is self-monitored, and we partner mostly with Notion and with Kangaroo. We're doing tests. It's two different things. One of them is a company that offers a multi-sensor, so you get water leak, motion sensor, smoke, and stuff like that, all embedded in one sensor. And it's Notion were acquired by Comcast. And the other one is a company called Kangaroo, which brings you a bunch of basically specific, target-specific kind of thing. Motion sensors, so you get 6 motion sensors, small one, and you can put them. So instead of having one big multi-sensor, you have very specific one. And we're testing both of them. Clients love them. We have north of 70% installment rate. Yes.
You're still saying testing.
Yeah.
How long have you been testing them?
And it's probably going to be another 3 years until we can have finite numbers. Think about this way.
Because there's less claims?
Because of the frequency of claims. Because let's say we have 100,000 customers. The frequency in claims in home is around 5%. We're talking about 5,000 claims per 100,000 people. Then half of the claims has to do with catastrophes and has nothing to do, and I have failed to find the IoT device that stop a hurricane and a hail. So you're left with significantly lower than that. And then even on that component, not everything can be stopped or mitigated. So in order for me to have a very concrete number that, it's not sporadic, that we stopped water leaks and people loved it and stuff like that, I need to have a statistically significant number. So I can go to the regulator and say, listen, if you put this product in, you will see a 3.5% deduction. And in order for me to do that, I need to collect more data over a significantly longer time. Hence why it's still testing. It's been used, and we have, we distribute hundreds of thousands of these products. And I have a ton of sporadic numbers on why it's beneficial. But for me to come and say, listen, and I'm telling you, there's a 6.3% deduction, I don't have that conviction, but it's a process. And hence why, but the testing is not, I'm giving to 5% of the customers. I'm giving it all across to all of the 100% of Hippo's customers are being offered that component, and north of 70% are installing it. So there is a significant number, and with time we have more and more, and over a period of time, I'm starting to see, now it's getting clearer and clearer by the day, and my conviction on the benefit of that is very high. Let me actually take it even a step further. There are 3 reasons to use the IoT devices. It's marketing. So people have an alignment, but the marketing is actually broader than that. It's the fact that I want people, insurance doesn't have a touch point with the customers. Insurance companies don't want to touch the customers because they're afraid that there's going to be dislocation. My aim is to have positive touch point for the customer. So Shefi at the end of the year is not saying, I just spent $1,000 and I didn't get anything from the insurance company. Yep. I want to have positive touch point with the customer and remind him of the value that they get. That's one. Second thing is reducing churn. If I gave you something and you actually got a benefit for that, because we have we filed and got an endorsement for a smart home coverage, which give you a discount. I'm sponsoring and you're getting this product, but you're also entitled to, it depends on the state, between 3.5% to 8% discount. This was a battle with regulator after regulator to explain that this is not an inducement. I'm actually not benefiting from that. I'm giving you something which is very tightly linked to reducing losses, and I'm giving you a discount for that. Hence, when it comes, if it was beneficial for you, the chances of you churning is lower because you're going to waive this discount and you're going to, you're going to enjoy less these products, although they're self-installed and self-monitoring. So you're not sending them back to Hippo. You can still enjoy them. And then the third one is the reduction in losses. All of these things work together to make the economical benefit that we want to get. The reason that we're using these self-installed products are also the price point. Because if it's $300, then it doesn't make sense to me because that's a crazy CAC and a crazy churn. But if it's $50, it makes a lot more sense. So my aim is to find the best of breed hardware out there, which the hardware provider are a lot more sophisticated than me in doing what they're doing, and then try and test whatever is the most beneficial for loss ratio and for customer. So that's our strategy for the IoT devices. And now we have a very high level of conviction. We work on the smart home also with SimpliSafe, with Xfinity Home, with Vivint, and several others of the providers in order to also get their customers and basically supply them discount.
So I have a question, Assaf, and this is actually something Allstate said yesterday in their earnings calls, and I'll read the quote by the CEO, Tom Wilson. It's always hard to tell what customers will do. We've always found that precision works for us on the long term, and that those people who rush to grow and not have precision to it end up having to fix it later. So if you look at homeowners, people trying to grow in homeowners are taking huge losses. Like, we just don't think that's the right way to build business, because you get the customer for a price that's not appropriate, and then you either have to lose them or manage them at a much higher price. And I've been speaking personally to some of agents that sell Hippo, and they have great things to say. And one of the biggest things, the good things they say, is the price point is so competitive. So where do you come with a really competitive price point. And you're talking now that you're getting to a place with conviction and the smart home is helping. But before that, the prices were really good.
Too good. Let me be very upfront. They were too good. And I'll take a more extensive, actually. I'll give you my 5-year learning as a founder in this space. You start as a technology founder. And when you start as a technology founder, your entire hypothesis is it's not price, it's about growth. And price is something that you have on the side because you don't really associate price with losses and with loss ratio and things of that sort. Hence, you'll focus on basically the growth component. And then what happened is you push a product into the market, there's crickets, nobody buys it. And then you have signs of life. And then you're trying to figure out what's the signs of life. And then you open the crack and you double down and you focus more and you extend. And that's how you build a product. And then you find what's the similarities, what's the commonalities, and you start expanding. In insurance, it's almost a 180. You launch a product, and then the first people that buy it, you need to ask yourself, why the hell did they buy it? Mm-hmm. Why the hell did they buy? They had all of the other options, but they bought from me. What have I missed? Did I miss underwriting? Did I miss pricing? What have I missed? Okay, so that's the first question. Then, because you counter and you start to actually work and push a lot more products, you don't even have in the back of your mind this entire notion of diversification. And then you find yourself that you were super good in selling your home insurance product in a specific area in Texas. Comes the reinsurance said, are you freaking crazy? You are not diversified. You are too concentrated. So there's no that component is also lacking. Then you enter a market and you can never really find the right pricing and the right quotes, and it takes you quite a long time. If you effed it up on pricing, it's not that, okay, I'm just going to change the prices. You need the regulator. You need to approve. It doesn't let you increase for more than from too much. There's a process. You can only change the prices in the renewal. So there's a long process. We realize in Hippo, we think that InsurTech is made out of two words. It's made out of insurance and it's made out of technology. My goal as a CEO is to manage that balance and that friction, that we need to have best of breed loss ratio, as well as utilizing all kind of technology and ease of use. We erred at the beginning that in some areas we were too cheap and we had to take rate, and you know what, and customer hated us for that, because for people which don't understand how insurance works, they think it's a bait and switch. I got you in for a cheap price, and then in the renewal, it was a 15% increase. And I can tell them, listen, prices and reinsurance happen. My loss ratio has increased. I had a gap in underwriting. It's not a discussion. Nobody even understands how pricing happens, that it's based on loss ratio. So in some areas, we're still too cheap. In some areas, we're not. Don't forget that price, the way that we're doing it, so we're using the latest and greatest in bi-peril and all kind of, the latest in actuarial kind of stuff. My aim is to shift insurance from a game of big numbers, which is averages, to a game of big data, which is basically pricing correctly the right risk. And what happened is it's cheaper for the right risk that we want to take, the risk that actually subsidize the bad risk for the carriers. This is the risk that is probably going to be the cheapest to. And for that, they're still going to get the right price and the cheaper price. Lastly, to finalize that, we still might be too cheap in some areas. We're still taking rates. We're still finalizing. I do think that we're not a price game. Our aim at Hippo is not to be the cheapest price you can get. We think you can get the most amount of coverage, because it's never apples to apples. You can get service line and water backup and equipment breakdown and the lowest amount of fees. And if you pay with credit card, it's going to be the lowest fees and all kind of other benefits, because we actually changed the forms and the coverages. It's a modern coverage. It's the most comprehensive coverage for the right price. Hopefully we're cheaper, and it helps us convert and get more customers, but it's not always the case.
Yeah, I would say having watched the InsurTech field kind of evolve over time, specifically the ones that have come into the property casualty space. I've seen two kind of splits. One is the InsurTechs that come in and they don't understand insurance. Okay. And to them, it's it's more of a technological problem, the way that you described it. It's we're going to make it easy for them to buy, reduce friction and all of that stuff. You obviously have learned that particular lesson. One thing I find especially interesting as you're describing it, because it's sort of ringing all the bells that I think about in my day-to-day business, is that you don't want to be in the pricing game. So you're readily admitting there could be pricing issues. It may take a little bit time, but you've done a certain number of things to sort of differentiate yourself that I think a lot of the other insurtechs have not done, right? The actual product design, I think, is always in the back burner. And I remember my first conversation with Rick McCathron, your insurance guy, and he was saying how we redesigned the policy form. It's going to be more modern. We're not going to cover furs and stock certificates. It's going to be reflective of a modern home that has electronics and data and different kinds of risk. And I said, okay, that's really interesting. In swinging into the telematics, I think what you've brought up, I think, is just like almost like a classic business MBA 101 type of thing, which is like, if you don't want to play with the price, differentiate your product. And as far as homeowners go, that's the one thing I've appreciated most about Hippo over these years, is like, I feel like you're on the boundary of really making it different, like the contact points, the telematics, the coverages, but yet still in that digital form. So it's true. It's using that true
Nick,
technology to be able to do that.
So let me, I mean, I'm going to lay you the strategy. I don't find it, I don't think it's rocket science. I think strategy is never the complicated thing. Execution and delivering on what your promise is, that's the hard thing. So we had several thoughts. And the thoughts is, if I ask you, Shefi, what's the difference between Travelers and Farmers and State Farm and Allstate? And we say, they have captive, and now they don't have captive. And like, but what's the difference in the product? It's exactly the same. Product. Isoform, it's exactly the same product, and it's a question of whistle. And I don't think that's a good differentiative aspect. I want to change the customer experience and what we're covering. That was the first kind of discussion that we had. The second thing is, if I'll give you over 5 years, basically what happened with Hippo, there were 3 points. The first one, we started to build the Geico of home insurance. We're going to build a direct homeowner insurance company. That's how we started the company. The average age of an agent is 58. Now it's north of 60. You know, and it's still there. Nothing has changed. What we realized is that while that hypothesis is there, the actual product that we were supposed to sell, we were set up as an MGA, and we were supposed to basically sell someone else's product until they actually let us change the product. That the product, as Nick was saying, was obsolete, covering you for fur coats and pewter balls and china and silverware, mausoleums and crepes are covered. But home office is not covered, and electronics capped at $2,000, and bicycle and camping. And I can give you a massive list. Exuberant amount of fees, initiation fee, policy fee, cancellation fee, inspection fees, tons of stuff like that. Not a lot of variety on other stuff that you can actually change with payment terms and things of that sort. If you pay monthly or quarterly or yearly, you're going to have latches of all kind of extra costs. It was just a very different experience. And we said, listen, the benchmark is not what Allstate and State Farm is doing, is what Amazon is doing. That was basically the benchmark that we put to ourselves. And that forced us to start changing the product. And if we change the product, the changes is not just on coverage and the forms, it's in the actuarial table, it's in the fees, it's in the fact that the problem is that you don't have an intelligent discussion with your agent. And then you see that the problem is that 9 years down the line, you have a tree that lifted the sewage, and you're calling your agent, say, Nick, look, I have $11,000 damage for my sewage. And said, you never bought service line. And you're like, what the hell is service line? And now you need a full lecture, and you're like, why nobody talked to me about that? And you're really, really pissed at them. So the problem is not claims, the problem is that Shefi thought she's covered for something that she's actually not covered. And we thought, by reducing and changing all kind of coverage, we need to lift up the coverage to make sure that you have the most comprehensive coverage. You have service line, water backup, equipment breakdown, all kind of other stuff that we have in every policy, every customer of us got. So you have the most comprehensive coverage. By the way, it has some benefit on loss ratio because some other partners are covering Hartford Steam Boiler and Mutual Boiler Re are covering some of these components, and we transfer the premiums to them. So, and then, go ahead, and then came the last phase of the company in my mind, which basically comes from the following point. Think about your current touch point with an insurance company. You have a crappy experience at day one of onboarding. Takes you 3 days to get all of an agent. You need to jump through the hoops of 70 questions. Fine. There's a lot of people that focus on that side. And then you have a crappy experience at year 9 when you have a claim. We spend 3 years changing the entire claim. And Nick, by the way, one of the things that people don't, we don't use a TPA. We're doing all of the claims in-house. We have a massive call center with claim concierge, 24/7, available over weekend, you name it. They have an NPS score of 70 on the claim side. Yes, Shefi.
That was actually something that you haven't changed, because that was your mantra from day one. Humans during claims. I remember that.
I agree.
You got that, yeah.
And we thought maybe it's going to be bots, and maybe it's, but we realized that the scenarios that people have when they have home, and you know, you have a burglary at 11 p.m. when you came for your friend, or when you have a water leak in the basement, or when you have fire, God forbid, the last thing I want is to talk to a bot. This is not a $700 iPad that was stolen. This is a $17,000 thing, and I need someone to come and close the water shut valve now, and then take care. So the experience is very different. And what occupies my time is this 9-year time frame that Shefi is a Hippo customer, which the insurance don't call you a customer, call you a policyholder. And in between, how can we align the interest? And we should, in our mind, we call it being a proactive insurance company. Not, and the idea is, how do we align interest? You don't want to hear from me too much. I'm your insurance company. I'm not your best friend, and you don't want to hear nudges and all kind of stuff like that. So the way that we found, which is beneficial, is if we help you reduce his losses to the minimum amount possible. Because the best claim experience is avoiding claim from happening in the first place, and not giving you a check on the spot when it happened. Because if you have a water leak in the roof, giving you a $17,000 check on the second that it happened, for 3 weeks, you're not going to be at home, and you need to find a service provider and stuff like that. So this is what we're doing with Proactive, with IoT device, with ongoing underwriting, with shelter acquisition, with our tele-maintenance. Keep supporting our customers in that 9-year time frame and adding value to them.
So my expectations will be, your vision and my vision completely align. So no smoke blowing here. I've been a Hippo fan for a very long time, so I'll just kind of disclaimer, lay that all out. My expectations will be, with that kind of product, Assaf, it'll be the rates will go up. I don't think that's a problem. I think the way you're kind of laying it out, I think people will appreciate the product that you're giving them. So I'm now thinking, okay, what about the customers you don't have yet? How are you going to sell them when insurance has this particular stereotype, and a lot of people that go and buy it and shop for it, they have trouble, with the commodity aspect of it, and they may go for the cheaper price. What are your thoughts towards the distribution aspect? How do you get it in front of them and educate them so they understand the quality of the product?
I'll add to that, so you can answer together, because everything you're describing, well, not everything, but 3/4 of it is aspirational, meaning you still have to deal with home insurance under a catastrophe loss or wind and hail, to your point, as you said. A lot of the telematics, the telemaintenance, the roof, the water leak, we still don't know what the mitigation number looks like. And what I find interesting, is not really a question, is actually you're going the route of having two customer bases. One customer base that said, I don't want the products that you're sending me. The other customer base said, sure, Assaf, give it to me, I'll install it. I want the engagement. So one, what does that engagement look like? And obviously the bottom line, where is the retention? Is the retention differ between these two groups? Because the market is competitive, and at the end of the day, it is going to be Hippo, maybe Hippo versus Branch, maybe Hippo versus Progressive. Pretty sure you're running into that one already. And you do depend on agents to sell the product and the extra coverage, which the Joe Schmo on the street may not even know to ask for it, but you've already done the research to differentiate between you and a different carrier. I see that as a plus and as a minus, unless you don't charge a premium for it.
So every point of benefit on the loss ratio enables me to overpay for all of these things, which are not that costly. We don't have two customers, we have one customer. Around 80-90% are basically opting in, and only 90% of them are installing, hence why it's north of 70%. It's just that for some people, it still sit on the mantle, but a very, very, small amount of customers are choosing it or basically opting out. There's always a bunch of people who don't want to have monitoring and things of that sort, which is fine. We treat all of the customers the same, and we don't even do an adjustment on churns and stuff like that. The numbers on the churns are very, very similar between these two groups. Churn in home insurance in general is not that significant. It's not our focus. I think there are basically two main things that we need to put on the table in here. One, home insurance is a $100 billion market. So am I running versus State Farm? Yes, but they have a $25 billion book, and I have a $300 million book. I have so much more leeway to keep on growing, and my aim is actually not to kill Allstate and State Farm, but I think I can grow into a $5 billion carrier, premiums as a carrier in, 5, 7, 8 years. And that's completely fine. I built a really, really big company. The second thing, all of the choices that I make are not short-term. We think there is a place to build a new franchise in insurance with a very different customer-centric approach. And you know what? And we might F it up at the beginning on giving, and it cost us too much on the IoT, or we gave the wrong IoT, or we over-treated the customer, or we bought this company Shelter, and the idea was to do home inspection and things like that. And then COVID happened, so I couldn't send you anybody to your home. So we shifted them to be telemaintenance. And you know what? And our customers love it. And they're calling us because they have a DIY project and because they want to install a shelf. And some of them have a problem with the leak, and someone walked them through this entire thing and booked the stuff for them on Home Depot. And it's massive. And was it intentional and strategic? No, but it happened. And things happen. And if you're making choices that are not just about what's the expense ratio for me in the following week, which is one of the things why I didn't think that we're ready to go public right now. Although there was no lack of opportunities to go public, because we haven't brought ourselves to the right conviction that we have de-risked all of the components that we wanted. We're definitely in the right direction, but choices that we're making are long-term, are not short-term, are not, you know what, I overspend this and it's on the CAC, and fine, then we did that. We know what we're testing. We had the hypothesis set up front, and then we tested after 6 months, 12 months, 18 months, etc.
I have a few questions, and one, we'll start with the easy question is, how did you become successful working with agents? And I'm saying successful because a lot of insurtech companies, startups are trying to get agents to sell their products, and they're not seeing success in that area. What's your secret?
Hey, there's no secret. One of the things that you learn in insurance is that it's hundreds, or it's a very hard work on dozens of things. There's no silver bullet. It's not, oh, we're way cheaper, or it's one click. It doesn't work like that. Hence why I don't like when someone said we're disrupting insurance. We're not disrupting. We're improving it, and we're working diligently on 5,000 different points. For us, just like we have a customer, which is Shefi, the end customer, we have a customer, which is the agent. We keep on interviewing them, and what do they need, and what do they get, and a quote 1, and a quote 2, and an easy bind, and a differentiation, and we give them the talking points, and we help them, and we give them support. And if they need help, and if at the beginning of this COVID, agents were under fire, and we compensated them more than we do, because we figured that a lot of them are mom and pop, and they would need the extra cash because they're under strength and stress, and it would come back and going to be beneficial for us because we treated them well. And we constantly think of them as our partners, as not as someone contentious. We're also very honest with them that there is one price. We're omni-channel. It doesn't matter if Avi comes from hippo.com, or he comes from a First Connect agent, or from a Liberty Mutual agent, or from Simply Safe. You're always going to get the same price. It's my problem how I manage my profitability. But for you as a customer, and hence the agent as well, because he knows, as opposed to what Allstate just did, that if you go to allstate.com, you're going to get a 7% discount. What does all of the agents need to think about that deal? So we're agnostic. You're always going to get the same price. We treat our agents exactly the same as we treat everybody else. They're our customers. We have PMs that take care of them. We have, think about it as an enterprise sales kind of channel, with SDRs, with the entire funnel to help support them, product marketing to take care of them. They're our partners. And it's a significant part, and we treat them like that. And if they need a tweak in the product because they say, listen, in the Northeast, there is a problem with this, and we need to change the water, the flooding kind of thing, then we're like, okay, fine, let's implement it, test it, see, do you like it? Can we tweak it again? And we work with a lot of these guys as partners. And I think that it's not a direct versus non-direct. It's treating everybody fairly. And again, I might leave some money on the table, but if I'm building a franchise over a long term, and you have to treat agents on a long-term kind of basis. You can't like, this week I'm going to give you this, and next week I'm going to change your commissions, and then they're going to hate you. We treat them as partners, and that's how I think that's basically the secret sauce, if you ask.
So if you go for an IPO, and I'm sure if someone will come and say, here's a big chunk of money, we want to acquire the company, you're probably, depending how much, you're not going to say, no, we're going to go be public. Do you think working with agents, and I'm saying this because of Lemonade and because of Root, which they don't work with agents, do you think that's going to hurt you in the public opinion eye that you are dependent on agents?
But I'll give some more context around that, because we've got the VCs chiming in the back of our head saying agents don't change. And if you work with agents, we deduct a point. Have they shifted their mindset? Because more and more insurtechs are working with agents, and obviously you're a great example.
I don't play the VC game. I play what we think is the right thing to build a franchise over a long term. And having agents is helped us a lot, and they've been great partners of us, and the right agents are working very well with us. But I'm also doing direct, and it gives me diversification of basically revenue sources. There is a massive benefit to working with agents because most of the costs are variable costs. So cash flow wise, it's way more beneficial. I don't need to spend CAC, but my LTV is lower because I need to basically share it with someone, and it's fine. We made this choice, and we know how we're managing that.
You're otherwise sharing it with Google. And Google Ads, right? So that comment actually is something that I always disagree with when people say it's not necessarily the most expensive channel, but there is a management aspect. And I'm so curious, the makeup of Hippo in terms of service, engineering, technology, marketing, can you share a little bit about how Hippo is built?
Yeah, so we have, again, as I said, it's an insurtech. So there's there's a significant tech side with dozens of engineers and super strong that are based in Palo Alto, and people that came from the best companies, and a product team, but also an insurance product team, which is very, very different, and a marketing team and all of that, and a finance team and all of that. The standard technology kind of company just beefed up by insurance thing. We need someone who understands how to report insurance accounting and things of that sort. And then at the same time, there is a full insurance operation from a bunch of underwriters, and actually, I think we probably have the best chief risk officer in the industry.
What's his name? Her?
Nicole Perrault.
Okay.
She's the smartest person in Hippo, and she has a crazy strong team of actuaries who keep on fine-tuning and underwriters and things of that sort. At the same time, we have a full massive center in Austin, and sadly, some of the insurance operations are growing linearly, and some of the other stuff are growing exponentially. Because if you have a 5% basically losses, then for every 100,000 customers, you have 5,000 claims. And even if our guys are managing 60 claims and not 40 claims, which is 50% better than the industry, I still need to add more people on the claim side to keep on supporting. And I have a call center, and I have a service and a billing, and that. So there's the insurance operations as well at the same time. We treat everybody are part of Hippo. It's not the A team or the B team. It's just not, they're the front line of Hippo. Hippo's NPS and customer-centric approach needs to come from the people that actually touch the customers, not from Assaf who sits in the back and then, wave his hands. It's the fact that you're calling our billing, you're calling our call center, you have a claim, God forbid. These are the people that actually have the most touch point. And this is, I think, another secret sauce. Like, that's how we raise them. That's how we choose empathetic people. And these guys are the most amazing people. And these are the guys that are doing the hard work.
So I want you to, since we've occupied your time for a considerable amount, I want to ask, one more additional question, which would be fantasizing. So you got shelter. We're dealing with IoT. my sense is that there's a view that insurance is going to dramatically change. Like you I think you've talked about that. You said a different kind of franchise. So can fantasize with us. Is there any part of you that's thinking Hippo will go into other lines?
It's not my focus now. I think
Fantasy.
My fantasy is to actually move a lot more, deep in the home. I want it to be your 1-800 number. Every freaking thing that happens, you're locked out of your home. Don't call a locksmith on Yelp. Call me. I'll send someone to your home.
Okay.
You want to do a renovation in the house? We'll take care of it. Your home appliances will take. I want everything that. I think that people have a tendency. You want to live your life, and there's some components that you want to put on the back end, and you don't want to take care of it, and it's a mess. And it's a game of trust insurance. So I want to be your trusted partner. That if anything that's wrong in your home, it will help take care of you.
And then, so your product ultimately isn't insurance. Your product ultimately is something more lifestyle oriented.
I don't know if
in a risk management scheme.
It's the risk management kind of thing. Some of them are defined as service. Some of them decide as like warranty. But all of that kind of component layered into one. I just want you as the customer to have one go and then just go and we'll take care of you. And I also think that there's going to be a massive debundling of insurance, which is, it starts to happen mostly because Geico and Progressive debundle everybody. But it's also because that's what happened in banks. You used to go to a bank, you used to be, you have an account in Chase, and you used to take the mortgage, the credit card, your saving, your money market account, probably trade stocks in that kind of thing. And that's not how it's done today. It's completely debundled. You take your student loans from SoFi and your mortgage from Better, and it's all over, and your credit card from United. And the bank is just one kind of thing that gives you services. But insurance companies have this entire belief that it's not going to happen in insurance. And I don't view it this way. We have a saying that if you tie two rocks together, they don't float. So if you get a crappy home insurance and a crappy auto, it doesn't make them a better product if you tie them together. And I think people are going to move to best of breed products to bundle them. It can be a Root and a Hippo if you need that kind of component, or a Progressive and a Hippo, or a Geico or a Hippo, or even a Liberty or a Hippo. It's completely fine. And it might be that you're going to buy a mix of product that fits exactly what the customer needs, and not everything one size fits all, which is how the industry is basically running today.
I have one more question that I'm interested in, a strategy question. And we often see, and this is from the incumbent side, so they look at InsurTechs, they say, okay, we like what they're doing. They try to copy it, but they don't go all the way. And I'll give you the example today with Progressive and Root. So Progressive did this in the past. They did the dongle, 2012. They sent it to someone's home. They put it in the car, went for a test drive, 30 days. Maybe they get a good quote. Now they go with a smartphone. So basically, you don't need a device. You have a smartphone, you can do it. But unlike Root, which comes and tells you, hey, from day one, you'll get the insurance. Like, don't wait 30 days. Here you can buy. Progressive is saying, wait 30 days. If you get a good price, you get a good price. And it feels like, and again, this could be from different reasons, but Progressive doesn't have the confidence to come and say to you, hey, Assaf, for the first 30 days where you're going to drive like a grandma while we test drive you, you're going to cost, $60. And a month later, we'll tell you what the actual quote is. This is probably a reason why they don't want to do it, is maybe you could say lack of data, but maybe they don't want to upset the customer, because if I give you a good price first month and second month, and Root is willing to do that, and there's a lot of customers that are happy, a lot are unhappy, but it gets them to like the second phase, which eventually, again, you talk about long-term vision, you'll all need to raise more capital and somehow to be here for 9 years or 10 years or 20 years. So would you say for an incumbent, go all the way, or they're fine? And
you cannot compare these two beasts at the same sentence. I used to work with McKinsey in New York in the financial institution group and serve a lot of these guys. Progressive is one of the better run companies. It just a very good, their expense law, their loss ratio, every component, they know how to manage auto. Probably the best in the industry. Now, for them, it's a trial, it's a hedge. They have, I don't know, $30 billion book of auto. They're not going to waive this entire thing, but they want to test whether it's interesting, it's not interesting. Let's do an innovation kind of thing. We learn from it. We're going to see what's going on. They don't need to go all out and piss some. Maybe there's a sub-component of customers that's what they want. Maybe they should target them in this way. This is not progressive business. Progressive business is a $30 billion auto business. And this thing is a way to spark the entire organization with some innovation. Let's learn some stuff. Maybe we can take a 2% improvement to the big organization. That's a massive benefit. We learned from it and stuff like that. Don't forget that Root also didn't start with giving you an insurance at the beginning. It took them a while. At the beginning, it started with you just drive around, and now you're expecting Progressive to give it. So they're coming from a very different point of view. Now, on top of that, it's also really, really important. I think it's almost impossible for big carriers to compete with startups in what startups do. I breathe, sleep 24/7. Whenever I take a shower, that's all I think about is how do I change and what do I do. And companies are, and big companies are not set up this way. We have passionate people that's all they think, and it's very difficult to change a DNA. And I'm not even talking about legacy system and politics and all of that kind of stuff. It's just a different beast. And to compete head-to-head in the same game as a startup who moves way faster and have the technology stack and all of that component, it's just not the right kind of thing. With that being said, I think big corporation should test, should see if it works, if it doesn't work. You can't, in strategy, copying someone else's strategy never works. It needs
unless
to
you're Facebook. Unless you're Facebook.
Unless you're Facebook, and usually what it doesn't work, you buy them. Which is fine. That's another.
No, this is okay. I'm going to stop you here because it's a bit you're painting such a pink world, and you know what? It's not exactly like that, because what you're saying is, okay, incumbents can compete with startups because of their mindset. Startups want to innovate all the time. You want to change. I actually get that, but that that line about going in all out or not, this is tricky because this is exactly what is happening in smart home. You've got so many carriers that are just doing a pilot in 2 states here, a pilot in California. So if you're talking about it's going to take you 3 years to really understand, to really be able to say with conviction, this is a percentage of loss ratio. What's travelers getting from putting smart home devices?
Travelers is trying to understand whether it's interesting.
But they're confusing the customer. The same customer that wants to buy Hippo is being confused by travelers, is being confused by American Family. So you still have to play. You also have a game to play.
Listen, it's a tiny component. There's a certain book that actually moves. Most of the customers stays for 9 years with their insurance company and do not shop around all the time. When was the last time you checked your home insurance? As long as it's fine and you didn't have a claim, there was no real reason to check the latest and greatest. It's just not, and it was also not possible because.
So you're winning by old metrics.
What do you mean by
even Hippo is winning by old metrics? You're winning by the fact that the customer is indifferent to shopping around.
No, but again, I am not trying to get 10% market share tomorrow. But if I get an extra $100 million, which is it's a sliver of this market, it's 0.1%. But for me, an extra $100 million in premiums is not negligible because these are the people that want to do that. And these are the people that actually care about these things. And word of mouth is way better. And all of that kind of stuff, that's awesome. But they are catering to their own book first and not to new. There's a reason why. You think that travelers don't know that they're covering fair coats and pewter bowl? That's crazy for them? No, but they're trying to look and conserve a $5 billion book of business, which is their current book. And if they're doing something to change the forms, to change the rates and all of that kind of stuff, in the renewal, they have to be non-discriminatory and apply it to all of their customers. They're scared shitless of doing it. So they can't do massive moves because they're going to lose $1 billion in business. And the chance of potentially making over 3 years, $2 billion, it's something that I have failed to see a CEO who's been willing to do that. And hence why they need to test and they need to check. And maybe the organization is going to learn until they're going to get to the right conviction. What I'm saying, it's very difficult to compete with someone that's all they care. If they want to have, if I don't know, Allstate want to have IoT devices, they would need to offer it to every customer of Allstate, which is 10, 11 million homes. Multiply that by $100 basically kit. They'll need to spend north of $1 billion, and they have to be non-discriminatory and offer to everybody and all of that kind of stuff. And then I'm telling you, the admittance rate is going to be, or the implication rate is going to be 20%, because it took us 5 years to bring it to 78%. What we tell them, how we operate, who's calling to, how you nudge, and then it's connected to the policy management system, and it's compliant, and it actually tells the regulator if it's connected or not connected. There's so much stuff that we learn because we wake up and doing it. Companies, it's okay, they're testing. It's like,
well, in terms of Progressive, they did mention that transition into collecting data, telematics data first, is something that they see in the horizon. So I think you have to respect Progressive. To your point, they're almost great at everything, but they're not ones to say, okay, Root is small, we're not eyeing Root. In fact, they mentioned Root, they mentioned Lemonade, not because they wanted to mention that, because somebody asked, right? So it was a response to. But I do think people are watching, people are playing. I think moves and counter moves, right? All the time I say that. But my only challenge is that, again, the telematics, because you on one side, you're mentioning the retention, people don't shop a lot, you're winning customers, you're winning new entrants, you obviously have really good distribution channel, you're working with agents, you're working direct, you've done support and service, and we know services is key, so you've got all these things right. You'll still lead with, this is smart home insurance. And maybe in my mind you lead with that, and maybe that's not actually.
We actually don't lead with that, and we still, and to be fully frank, I still don't know what's the right kind of lead and what customers exactly want, and we're still testing it. And it's an early day. We're still, what's the messaging, and does that resonate, or cheap, or innovative, or modern, or what, different customers, and you have different landing pages for different customers that come from different routes and different words. And I don't need to tell you, but we know how Google works and how to route these kind of things. We do think that focus on differentiative home insurance product that is not just about price is key. And we believe that if we can help you prevent losses and keep on monitoring your home, we haven't even talked about 70% of the US is underinsured, because you never call your agent to say, listen, I added a deck, I changed the kitchen, turned the garage into a living room. And that's a massive problem in my mind, because the basic contract is for Shefi to pay a certain fee. And if God forbid shit happens, I'm going to be there to take care of you. It's a very simplistic product. However, if you are underinsured because you didn't want to call me to say, listen, I added a swimming pool, and then God forbid the next door neighbor kid jump in when you were away, and now the liability is on you, you're going to blame me, although you never told me that there is such a thing. So we keep on monitoring and making sure that our customers are always insured for the cost that they should be insured. And by the way, it's not always upsell. Many times is, Shefi, you replace the roof because our permit records show that and our aerial imagery approved that, and you're entitled to a 6% discount, and it's completely fine. My job is to make sure you're constantly insured for what you should be insured. So it's about building a different relationship with the customers. Think about the relationship. You're buying a product now, shitty experience, and you know that the first sentence out of your mouth, 9 years when there's going to be a claim, I knew you guys going to do it. For 9 years, I've been paying you guys every month. I knew you guys going to do it to me. What kind of an experience is that? You know it's going to happen.
I knew.
Assaf, I have one question, and
I have 100 questions. Go ahead.
You talk about long term, and you mentioned Amazon, and Amazon, they've built their business, and now it's going to be very hard for companies to compete with them. 5 years from now, 10 years from now, Hippo has proof that smart homes work. The loss ratio is better. Big insurance companies keep an eye. They adopt your model. They catch up to you. Where is the competitive advantage then?
Because I'm always going to have the 15 other products in the works. Because I just live and breathe. I don't copy someone else. I have a full team that always think, what's the next? I don't know what's going to be in 5 years, but I'm telling you, it's not going to be what they think it is. And we're going to be ahead of everybody, because that's all we breathe and think. And it's going to come. That's how this industry works. Not how the industry insurance, how the industry of that's why there is a place for startups to come up. Why there's a new energy, and I don't view it as a negative. I think that's what
I see that. You're definitely. We look at you, Assaf, and we don't see Assaf from 5 years ago.
I don't think there ever is going to be a big, kind of like like a Google or an Amazon or a Facebook in insurance. I think it's going to be across a lot of companies, and you talk about telematics, auto telematics. Honda today did launched a new app. When you lease a car, when you buy a new car, one of the first things you do, you download the car maker app. Now they'll tell you, hey, we'll see how you drive, and a few weeks later, they're going to send you a message with a quote because they have your credit score, they have your financials, they saw how you drive, they know if you're married, and they're going to be in the auto insurance space, and they have the distribution.
I agree.
Yeah, so there's never going to, I don't think it's going to be a winner, yeah.
But I also think that there's a good chance that the biggest insurance company soon is actually not going to be an insurance company.
We say that all the time.
It can be a completely different company that is going to offer also insurance. And again, this is not a winner-take-all industry. There are really, really big companies that are, home insurance is very, very fragmented. And you still have, I think that the top 15 has, what is it, like $1.5 billion, $2 billion in premiums, and they're really big, good companies. It's not a zero-sum game. It's not me taking over Allstate and State Farm. It's just not how we think about it. Hence why we also partner with them. We never say, oh, they suck, it's evil. It's just not our DNA. We think there's a lot of flavors, there's a lot of kind, and there's a lot of competition in insurance. We have an agency. And you know what? And in Hippo, we're live at 29 states. There are 21 other states that we're not live in. And I'm happy to offer Liberty Mutual. It's not a problem. It's like, if a customer comes, I might as well offer him insurance. And it's not going to be Hippo insurance. It's completely fine. And you know what? Just like when someone calls Hippo and want to add an auto, I'm happy to offer him Progressive. It's because I think it's the right offering for him. And we're going to have a partnership with several others. And we're offering, it's customer centric. It's what the customer wants. And it's not a zero-sum game. And it's not this versus that. That's how I view this entire industry.
It is a zero-sum game when a customer has to choose a home insurance carrier, because they're not going to choose Liberty and Hippo. They're going to choose one.
Yes.
In the grand scheme of the products, right now, in the short term, you can offer Liberty and Progressive, but the minute you expand to a state, you become a competitor. So now it's kind of this co-opetition, which is it's not good or bad. It's you're playing the cards to this point in time.
But this is not, so try and do that. Call our call center and try and run your farmer's insurance policy with them. You know how many times I listen to the calls every week for 2 hours. And I always tell our call center that if Shefi is calling them and say, listen, I have insurance with farmers, and this is the policy. I tell them, spend an hour, explain to her all of the coverage. If she'll ask a question, be super courteous. And at the end, I completely support you if you say, you know what, Shefi, I actually think your farmer insurance is completely legit. People give you slightly better coverage in some stuff. We're probably going to be more expensive. We think it's completely, I think farmers is a good insurance for you. And you know what? And I always tell them kudos for that, and it's fine. I am not building a short-term kind of corporation, and it's not a venture. It's a business, and it's a franchise, and it's going to take us a while to build it.
How are you planning? Is Spinnaker being used or going to be used to help you get to other states?
Yes, but even that, it's not going to be our sole carrier. We're still going to use some other carriers as well. We think there's a lot of benefits on the MGA, and some of the biggest benefits is the ability to actually offer all kind of coverages by different carriers.
Yep.
So Spinnaker is going to be the bulk of our book, but definitely not the entire book.
Yep.
On a scale of 1 to 10, how hard is insurance?
If I knew what I knew now, 0 chance I would have started this company.
Oh, no way.
Oh, 0 chance.
You're good.
That's why he wants to change. He wants to change. He wants to be a different company than insurance. That's what he's planning.
No, it's fine. Listen, I love it. I grew to love insurance very much. I think it's a very, very interesting field, and it really brings a lot of benefits to the customer. It's one of the only things that you can really be there for the customer in his big pain point. And I really appreciate it. And it's very complex. Every time that I think, oh, I kind of mastered that stuff, and then I talk to Nicole and I get slapped that I don't know anything, and it's completely fine. And I keep on learning. You know, there's a point when you raise money and you start the company, and you're in the rabbit hole, and now you need to figure it out, and you need the smartest people, and you're committed, so you need to make it happen. We didn't start with building a policy management system and a claim system and all of that kind of stuff. We never started. We didn't know what a freaking thing it is even. And I was certain it's going to be a TPA, and I was certain it's going to be a third-party call center. And then you realize it's not the touch point that you want, and you kind of deepen it up. And underwriting and actuaries, like now I have a team of, 10 actuaries. Do you think I had a thought that this is what's going to happen? Of course not. But you're committed, and then you find where the differentiation and where you want to double down, and you find the strongest people, and you keep on focus on the customer, and that's what brings you value.
Commitment and conviction.
What's that?
Commitment and conviction, and consumers will follow. That's my takeaway.
I think yes. And independent thinking, which is how we believe, and we're Israeli, so it's having a very tough discussions, which are high volume discussions. But we have just there's something I took from McKinsey, that we have an obligation to dissent. So the most junior person, if you don't think that something is right, you're obligated to actually dissent and raise it up. And we think that by having the right kind of balance around the table brings the best ideas to the front.
So high volume means passion. Speaking as an Israeli.
Yes.
Yeah, I think it's, you look at the market, we talk, sometimes we criticize startups and this and that, and it's not from a place of, what are they doing? And we understand it's a step. Like if you look at Lemonade, and I spoke to someone earlier today, and he said, look, I bet you their customer acquisition cost now is better than what it was before, because among some millennials, and I bought pet insurance from them.
And conversion improved, and they
exactly.
And they built an amazing. By the way, the industry always say, it's Hippo versus. It's not. Listen,
no. Hold on. In the Calcalist, in the Israeli websites, they say it's Hippo versus Lemonade.
We didn't say that.
No.
I think
No, the Israeli. It's but the Israelis love that kind. It's don't even get me started on reporting on Israeli reporters on this thing. But I actually think that they built an amazing thing. They proved that there is a place to build an amazing brand for millennial, and most of it is renters, because that's what millennial purchase, and now pet and stuff like that. It's a very different strategy than what we'll focus on the home, and basically our customers are very different. We want to give you the best home insurance in the world and take care of you while you live in it. That's our strategy. It's a very different strategy, and all of the choices that we make are for that, and all of the choices that they make are for taking care of a millennial customer and bring, they have the giveaway. And it's not a bad. It's like there's more than one way to skin a cat, and we can learn from everybody. So that's why, and I actually really value what you did in coverage here. It's when we started, and you started at about the same time. I still remember this ITC, the small one in Vegas, that there were like 150 people in like probably 8 booths or something like that going on there, and a random dinner, which was very quirky. It wasn't InsurTech. It was very quirky, like, insurance, it's VCable, it's not VCable, and stuff like that. And by having more and more discussions, and people like yourself who is educating the industry, it becomes an industry. It becomes something. It becomes, we work with, how many companies, I probably talk to 5 InsurTech startups a week. Because most of them are not competitive, and I'm happy to go and share all of the marks that I have on my back on what is an MGA and a reinsurance and policy management system, and when do you start a call center, and how do you treat risk, and when do you hire your first actuary, and what do you do with a call center, and do you shift it to there, and what a TPA, and how many lessons I have or scars on my back from that, and I'm happy to share it. I don't expect them to compete, and if they can compete, then I haven't done a good enough job in differentiating and in operational excellence in the company.
Wow. This is a first. I have nothing to say.
Israelis are honest. Israelis are honest. That's what it is.
I have nothing to say, but man, this is going to be
Italians.
Quite the audio file to transcribe. So, wow, that was fantastic. We killed 2 birds with one stone. We did This Week in Coverager, and we had Assaf Wand as our guest this week to give, and it was more than just like teaching us about Hippo. It was like teaching us about business and how we can think differently about insurance. So I don't know what to say. Thank you.
Oh, it's great to have you,
Thanks for
Assaf.
having me. No, appreciate it.
Yeah, no, it's fantastic. So Thank you, everyone. Have a great weekend. Shefi, Avi, thank you. Assaf, again, thank you very much. We really appreciate it.
No, thanks very much for having me. Always a pleasure.
Okay.
Thank you.
Thank you.